Hey, my name's James Nicholson. I hope you're well. Just very quickly, I want to say one thing. I do have more t-shirts than this one. I'm making a batch of videos now because I'm just about to go on holiday to France. So I've done some back-to-back training videos here. Now, in this video, we're going to talk about what to do if you have a property that is down valued. Now, this is happening a lot more in this market right now, and that's because valuers need to make sure that they get the figures right, because they're going to be judged at where house prices end up next year, not where they are today. Now, before we jump into this content, make sure that you subscribe to the channel over here. Smash that subscribe button, guys. Go on, do it right now. Hit the bell notification and hit that like button, guys. We're really, really close to getting 500,000 views on the channel now, which is mind-blowing. And so every time you hit that like button, it pushes it out to more people on YouTube. So quickly do that now. So, down valuations. These are very common in normal markets, and they're even more common today because right now we've got uncertainty in the market. Let's just think you're a valuer, for example, and you're reading the Daily Mail and it says, look, house prices are going to crash 30%. House prices are going to crash 10%. You don't want to be the one that's overvaluing the properties that you go and see, because if you do that and the bank that you're working on their behalf, they could get in a lot of trouble, and you're going to be the one that really loses your job ultimately if you've overvalued all the properties for them. So that's a real thing to consider here. And so valuations often come lower. Now, it's not uncommon for it to be 5 grand or 10 grand, but sometimes it can be a huge amount. I mean, I've had valuations where it's been £50,000 lower on a property that's only £200,000, right? And so these are some things that you can do to resolve those issues. So first and foremost is try a new lender, right? That could be an option for you. When we look at our properties, when we're doing refinances or buying property, we always use a mortgage broker. And those brokers, they get an understanding on lenders. They know who's going to high value, who's going to low value. They get that information because at the end of the day, you're dealing with one property. They might be dealing with hundreds or thousands. They've probably dealt with many thousands over the years. So they know the lenders that are likely to down value. And so if you get a down valuation, go back to the broker and say, look, this isn't great, is it? We need to make sure that we look at another lender as an option. And that could be one thing that you do here. Now, you might lose a bit of money. You might lose some valuation fees and stuff like that. But sometimes it can be worth it, right? So that's one option, is to look at that. Next is that if you're the one selling, or if you're refinancing, just accept the lower price, right? So if you're selling, maybe the buyer might offer you less. And so that could be something that you have to accept if you want to get that deal done. You've got to really weigh up what the importance here of this transaction completing at the price that you want it to be at. And so sometimes you've just got to accept that lower price, and that can be something that you do. Now, this is something that I've done multiple times, and that's to split the difference, right? So what do I mean by that? Well, what I mean is, let's just say one of my flats in Dorking, right? It was down valued when I was buying it by £5,000. £5,000. So what we did, we agreed with the seller that we would pay, he would knock off £2,500. Does that make sense? So it was down valued by 5,000, and we said to the seller, look, let's meet in the middle. I'll pay extra. I'll pay 2.5, you pay 2.5. So he knocked 2.5 off the asking price. So that meant that this property was a flat. This was a few years ago. We were going to buy for 160. It got valued at 155. And so we bought for 157,500. They knocked off their bit. That means we had to increase our deposit. That's how that works, right? So we had to increase our deposit marginally in order to get that deal. I wanted that deal because I lived in that property at that time. And so that was why we wanted to go ahead with that one. So splitting the difference could be something to do. Now, if they downvalue it, sometimes they're going to tell you why. So I had a property downvalued because it didn't have double glazing. right? And so they're very clear on that if you had double glazing, you would have got a better valuation on that property. And so you could fix that problem, right? You could fix that problem. Or if they see a crack, for example, that could be where you get a big down value, right? Because they really worry about stuff like that. So fix the problem, get it certified that it's all good, and then get it revalued at a later date, right? And so that's what you've got to understand is this valuer's job is to not care about you, is to care about the bank and the person lending you the money, that they're not going to have problems. So if there's any issues, if you can fix them, I would advise that you fix them. That's a very, very smart things to do. Next is maybe get some indemnity insurance and you pay for it. Say, for example, an extension was built, right? And it didn't have planning permission, but it was ages ago. And so it's lapsed on that. And so the lender's a bit twitchy because they're like, well, yeah, maybe we can't get in trouble with this, but it's a risk and they don't have a high tolerance for risk. So you could say, look, well, I'll pay for the indemnity insurance. If any issues come up with this regarding that extension or something that should have been done, then that's something that you can get sorted. Now, we had that on a property I bought for Georgia. And so there was something called chancel repair. I think it's chancel repair. And that's where in the freehold agreement or the deeds, it says that if the church in the area needed any work, everyone in that area has to pay towards it. It doesn't ever get really called in, but it could get called in. And so you can get something called chancel repair insurance. It's a 50 quid one-off payment forever, not a year, not a month, 50 quid forever. And it takes that problem away, right? When it comes up and the solicitor tells you about it, it sounds like it's the end of the world. If they just came to me and said, look, give us 50 quid and this will sort that out, it would have been a lot easier to deal with. So indemnity insurance could be something that you look at as well. Look, if you're selling the property and there's a down valuation on that person, one thing you could consider is just get a new buyer. Just get a new buyer, right? Now, not so easy in this market, but this video is there for the test of time, right? People will be watching this in years to come. But even in this market, depending on where that deal is, speak to the agent. Are there other people that were interested in that deal? If there are, and there was tons of them, which there still are on some deals, then talk about getting a new buyer. That could be something that you do. And the last one is tough, but it does work. Appeal, right? If you feel the valuer is wrong, get another opinion. Appeal it. Roughly about 10% of those are successful. No valuer likes to be told that he's wrong, for sure. And no valuer wants to go against the other valuer. But it does work. You need to lay out your case and you need to show them comparables. Sometimes they're wrong. And if they are wrong, they will take it on the chin and they'll say, you know what, we're wrong. And you can get that valuation brought up. That does happen, right? So that's one other option for you. So look, in this market, there are plenty of down valuations. Don't be disappointed if that happens to you. It happens very often on a lot of deals, particularly in a market where there's unpredictability on where we're going to end up with rates in the future. So you can do all of these things to improve your deal and make sure that you don't get undervalued in future. I hope they're useful to you. And if there's anything that you think I've missed, then please do comment below because look, your opinion and experience really helps this channel and community as well. So do post that below. And if you want to join and learn about how to invest in property, we've launched something called the Property Accelerator now. It's got all of the training courses that you could ever need on being a property investor. Now, I'm not asking you to join a webinar. I'm not asking you to come along to London and sit there for a day and then sell you something for thousands of pounds. It's £1. You can try it for £1, see how you get on with it. If it's not for you, you can cancel. There's no contracts or commitments of any kind. But if it is for you, it could be the best £1 that you've ever spent. So look in the description below, click on the link, have a look, check it out, and hopefully you'll join us in the Property Accelerator. Do subscribe to the channel, hit the like, check out all the other content on my channel, including this video right here.